Oh, good. Great. So let me get this straight. We've got over $1 billion flowing into crypto, a brand new Wall Street Bitcoin ETF launching. And fear? Yeah, fear is actually going down. And price? Basically doing nothing. Ah, yes, totally normal market behavior, because obviously when institutions are buying and sentiment is improving, the correct move is sideways confusion, or better yet, a little dip, just to keep things interesting. Almost like someone doesn't want you getting comfortable. Welcome to the market, where logic shows up late and manipulation is always early.
You're listening to the SENB Daily Brief, powered by Whole Shot Coffee.
All right, welcome back to the show. Let's take a look at what the market is actually doing today. Starting with Bitcoin, BTC is sitting right around that 71 to 72,000 range. And if you look at the chart, it's basically stuck in a sideways grind. We had that push earlier in the week, tested the upper range, and then just faded right back into consolidation. So right now, this isn't breakout behavior. It's positioning. Moving over to Ethereum, ETH holding around 21 to 2200. Not exactly inspiring, but also not breaking down. This is stabilization, not strength. It's following Bitcoin, but it's not leading anything. Now, XRP, still lagging, sitting around that 130 range, and structurally, it just hasn't reclaimed momentum yet. There's potential there, especially with regulation chatter heating up. But right now, it's waiting. And Solana, hovering in the low 80s, trying to hold structure after that longer-term downtrend, but still not convincingly breaking out. So again, we're seeing support, but not conviction. Now, zooming out for a second, total market cap sitting right around the $2.5 trillion range. Fear and greed climbing back into neutral, mid-40s, which tells you sentiment is improving, but not enough to trigger real risk-on behavior. And here's the big one. Bitcoin dominance, back up near that 58 to 59% range. That means capital is still hiding in Bitcoin, not rotating aggressively into alts. So if you put all of that together, this is a market that's stabilizing, but not committing. So yeah, everything looks stable until you zoom out and realize the world might be getting a little complicated because geopolitics just decided to re-enter the chat and markets are paying attention. We'll explain why right after the break.
You're listening to the SENB Daily Brief, powered by Whole Shot Coffee.
All right, so let's zoom out for a second because this market move, it's not just technical. Earlier this week, Bitcoin pushed up into that 72 to 73,000 range, driven by ceasefire optimism and a pretty aggressive short squeeze. We're talking over $400 million in liquidations. But then that optimism didn't hold. Tensions between the U.S. and Iran started heating back up. Talks stalled. Oil markets reacted. And suddenly, risk came back into the system. You even had renewed rhetoric around the Strait of Hormuz, which, if that escalates, that's not just a geopolitical story. That's a global liquidity story. And here's where crypto comes in. Despite all the ETF inflows, despite improving sentiment, Bitcoin is still trading like a risk asset. So what we saw was simple. Relief rally on hope, followed by pressure when reality showed up. BTC back into that 71 to 72 range, ETH moving right alongside it, and volatility staying elevated. Because right now, crypto isn't just reacting to crypto anymore. It's reacting to oil, to geopolitics, and to uncertainty at a global level. So from here, it's actually pretty straightforward. If tensions cool off, you're probably looking at another push toward that 73 to 75,000 range on Bitcoin. But if this escalates, especially around oil supply or trade routes, you could easily see a 5 to 10% pullback across the market. So keep an eye on oil because right now, that might be the most important chart in crypto. So yeah, just your normal crypto market being controlled by global geopolitics. But coming up next, Washington is back in session, and they're about to decide how much clarity crypto is actually going to get. And markets are already starting to react. We'll break that down right after the break.
Some mornings start quiet. No rush, no noise. Just good people and the decision to roll forward.
All right, so while the market is dealing with global tension, Washington just quietly stepped back into the room. The Senate Banking Committee is officially back from recess, and as of today, they've restarted negotiations on the Digital Asset Market Clarity Act. Yes, clarity. We'll see about that. Now, the big sticking point here is still stablecoins, specifically whether you should be allowed to earn passive yield just by holding them. The current compromise looks like this. No passive yield on balances, but you can earn rewards through activity, which, depending on who you ask, is either a reasonable middle ground or just yield with extra steps. And this is where things get interesting for the market, because this bill doesn't just cover stablecoins. It's about defining who regulates what. SEC, CFTC, who actually has control over crypto assets. And if that gets resolved, that's when institutions stop hesitating and start allocating. Now, over on X, there's already a lot of chatter around XRP, stablecoins, and anything tied to payments infrastructure, because if this bill moves forward, it could finally give those assets a clear regulatory lane. But right now, we're still in the negotiation phase. Markup is expected later this month, and until that actually happens, this is potential, not confirmation. Now, if we get a successful markup in late April, you're likely looking at a Senate vote sometime in May. And if it passes, that's a major unlock for institutional adoption, especially around XRP and stablecoin ecosystems. But if this gets delayed again, you're pushing it closer to election season. And that's where things tend to get less about clarity and more about politics. So yes, the government is working on clarity, which historically has never caused any confusion at all. But coming up next, while regulators are debating the future, investors are already making moves in the present. And the money flowing into crypto right now is hard to ignore. We'll get into it right after this.
She redefined what it meant to race without limits. She proved that silence could be louder than words. Fearless, fast, focused. A reminder that champions are built on grit. That same intensity now fuels her signature blend. Roosted and roasted. Bold Italian roast crafted with the spirit of champions. Ashley's Roosted and Roasted, only at WholeShotCoffee.com.
All right, so while the headlines are still screaming uncertainty, the market's emotional state is actually starting to calm down. The crypto fear and greed index is now sitting at 46, officially back in neutral territory. Just to give you perspective, yesterday, 42. Last week, 35, firmly in fear. Last month, 30. And earlier this year, we hit a low of 5. Yes, 5, which is basically everyone panic and sell everything immediately. So this move higher tells us something important. Sentiment is improving. Not euphoric, not bullish, but no longer scared. And that shift, it's being driven by a combination of things. Improving price stability, strong institutional inflows, and the simple fact that nothing has completely broken. Now here's the part most people miss. Neutral sentiment is where markets make decisions. Fear is emotional. Greed is emotional. But neutral, that's where positioning happens. So what we're seeing right now is a transition phase. Retail is starting to relax. Institutions are already allocating, and the market is trying to figure out what comes next. If this index continues pushing toward 50 and beyond, that's your confirmation of sentiment recovery. And that's usually when you start seeing capital rotate into altcoins. But if macro tension picks back up and we drop back into fear, that tells you confidence was temporary. So yes, the market is feeling better, even if it still has absolutely no idea what it's doing. But coming up next, while sentiment is recovering, the real story might be where the money is actually going, because this week, institutions didn't just show up. They showed up in size. We'll be right back.
You're listening to the SENB Daily Brief, powered by Whole Shot Coffee.
Welcome back, everyone. Now, this is where things start to get really interesting, because while price has been confused, money, not confused at all. This week, digital asset investment products saw over $1.1 billion in net inflows. That's the largest since January. And leading the charge, Bitcoin, roughly $870 million flowing into BTC-focused products, Ethereum pulling in just under $200 million, and even XRP seeing increased participation in the mix. So let's pause for a second and really understand what this means, because this is happening while price is not breaking out, which is a little inconvenient if you're trying to panic sell. Institutional money doesn't chase headlines. It doesn't react emotionally. It positions. And right now, it's positioning into weakness. So while retail is still uncertain, while sentiment is just crawling back to neutral, institutions are already allocating capital. That's not noise. That's intent. If these inflows continue, they start to act as a floor under the market. And if macro pressure eases, that's when you get the breakout. But if these flows reverse and turn into outflows, that's when things can unwind fast. So yeah, price might be indecisive, but the money, it's already made up its mind. But coming up next, Wall Street just crossed a line it's never crossed before, because for the first time, a major U.S. bank has launched its own Bitcoin ETF, and that changes the game. We'll break it down right after the break.
Monday morning starts here, coffee in hand, ready for the grind. Leaving the bike behind, chasing the week ahead. Fueled by the passion to ride and the coffee that gets us there. Whole Shot Coffee. Fuel your life.
All right, so if you needed one more signal that this market is changing, this is it. Morgan Stanley has officially launched its own spot Bitcoin ETF, ticker MSBT, trading on the New York Stock Exchange. And yes, this is the first time a major U.S. bank has done this. Day one inflows, around $34 million. And notably, it's coming in with some of the lowest fees in the space. So let's be clear about what this actually means. This isn't crypto trying to break into Wall Street anymore. Wall Street is now building directly on top of crypto. And when a bank like Morgan Stanley launches a product like this, it's not experimental. It's strategic, because this opens the door to a completely different class of capital. Traditional clients, managed portfolios, institutional mandates, all of which now have a familiar, bank-branded, low-friction way to access Bitcoin. And that changes behavior. If this product gains traction, you're not just looking at one ETF. You're looking at more banks entering, more capital rotating in, and potentially billions in new inflows over time. But here's the key. This doesn't move overnight. It builds quietly until suddenly it doesn't feel early anymore. So yeah, totally normal week. Geopolitical tension, regulatory debates, and now Wall Street launching Bitcoin products. But coming up next, let's see what you think about all of this, because the takes out there right now are something. Proof of Thought mailbag right after the break.
You're listening to the SENB Daily Brief, powered by Whole Shot Coffee.
All right, welcome to the Proof of Thought mailbag, where the takes are hot and the logic is optional. First up, we have at Chart Ninja X and asks, ETF inflows are up, sentiment is improving. Why isn't price moving? Because markets don't move when things look obvious. They move when positioning is complete. Right now, this is accumulation behavior, not breakout behavior. Next question is from @AltcoinDreamer. Is this finally the moment for alt season? Not yet. Bitcoin dominance is still elevated, capital is still concentrating, and until that shifts, alts are passengers, not drivers. Next, @MacroMike wants to know, are geopolitics actually affecting crypto now, or is that overblown? It's real. Oil moves, liquidity shifts, and crypto reacts like any other risk asset. The difference is crypto reacts faster. Okay, @Regulation Nation asks, if the Clarity Act passes, what's the biggest winner? Anything tied to payments and compliance. XRP, stablecoin ecosystems, and platforms that already align with regulation. Because clarity doesn't reward chaos, it rewards structure. Next, we have @DipBuyerDan, and he asks, should I be buying this dip or waiting? Ah, yes, the eternal question. If you're waiting for perfect clarity, you'll probably buy higher. If you're buying now, you're betting on the trend, not the timing. Just depends on which mistake you prefer. Okay, last one for today is from @LiquidityLurker. If institutions are buying this much, why does it still feel like nothing's happening? Because you're expecting it to feel exciting. Real accumulation is usually boring. It's slow, it's quiet, and it doesn't give you that big emotional confirmation. That comes later, when price finally moves, and everyone pretends they saw it coming. All right, great questions as always. But coming up next, let's tie all of this together, because today's market is sending a very specific signal, and most people are missing it. Final thought right after the break.
Our beans are washed in ancient waters, filtered through coal seams deep beneath the Utah mountains. Okay, not really. We totally made that up. But it does sound badass, doesn't it? Here's the truth. Premium Guatemalan beans, aged for 30 days in real whiskey barrels, then carefully roasted smooth in the golden light of California, inspired by the legendary Drunkard's Wash Desert Race in Price, Utah. Bold, smooth, with a subtle touch of whiskey and oak. Drunkard's Wash. Whiskey barrel aged, bold and unmistakable. From Whole Shot Coffee Company, Fuel your life.
All right, so here's the reality of today's market. You've got institutions steadily allocating capital. You've got sentiment climbing out of fear. And you've got Wall Street officially building on top of crypto. And yet, price still feels underwhelming. But that's the point, because markets don't reward you when things feel obvious. They reward you when things feel uncertain. But the underlying signals are strong. Right now, this is a market in transition, from fear to neutrality, from speculation to structure, from retail-driven to institutionally supported. And those transitions don't look exciting while they're happening. They look slow. They look frustrating. They look like nothing. Until suddenly, they look like everything. So the question isn't, why isn't this moving faster? It's, am I paying attention to what's actually changing? Because in this market, the biggest moves start quietly. And by the time they get loud, you're already late. That's it for today. If you got value from this, like, subscribe, and share it with someone who still thinks this market makes sense. And remember, buy low, cry rationally. The SENB Daily Brief is a production of Sen B'Hiro Media in collaboration with Whole Shot Coffee, coffee that fuels champions. Written and hosted by yours truly, Sen B'Hiro. Production, editing, and scheduling handled by Maya Valencia, who somehow keeps me on time, caffeinated, and occasionally polite. Original theme music composed and produced by Paul Hahn, the community legend whose beats hit harder than a Fed rate hike. Research support provided by the SENB community. Proof that sarcasm and spreadsheets can coexist. For more shows, merch, and on-chain chaos, visit SenBHeroMedia.com. Thanks for tuning in. Stay caffeinated. And remember, if it's not in the brief, it probably wasn't bullish anyway.
Set my wallet free.